Failure to enforce Russian oil fee cap may want to jack up oil expenses. U.S. Reputable Tokyo. The global charge of oil ought to surge by means of 40% to around $140 consistent with barrel if a proposed charge cap on Russian oil is not followed, alongside sanction exemptions that would allow shipments underneath that rate, a senior U.S. Treasury legit said on Tuesday. U.S. Treasury Secretary Janet Yellen will discuss implementation of the U.S. charge cap concept and international economic developments with Japanese Finance Minister Shunichi Suzuki after they meet afterward Tuesday, the professional stated. The purpose turned into to set the price at a degree that protected Russia's marginal cost of manufacturing, so Moscow is incentivized to hold exporting oil, however no longer excessive enough to allow it to fund its conflict against Ukraine, the official mentioned. Japanese officials had expressed challenge approximately the fee cap being set too low, however had no longer rejected a capacity fee range of $40 to $60 in step with barrel outright, the legit stated. Yellen is the usage of her first trip to the Indo-Pacific area as Treasury Secretary to build guide for the proposed price cap on Russian oil and answer nagging questions about its efficacy if India, China and others now buying cheap Russian oil do not participate. The United States and other group of 7 wealthy countries Britain, Canada, Germany, France, Italy and Japan, along with the European Union in June agreed to discover implementing the cap to reduce Moscow's sales and expend its battle chest, but details are nevertheless being worked out. As the European Union prepares to impose a phased embargo on Russian oil and ban maritime insurance for any tanker that carries Russian oil, a flow predicted to be matched by using Britain, Yellen sees the cap as a manner to maintain oil flowing and forestall a similarly price spike that would lead to a recession. Price exception. Washington has proposed a price exception that might rescind that ban on maritime insurance for orders under the agreed fee to prevent hundreds of thousands of barrels an afternoon of Russian oil production getting stuck because of a lack of insurance. Treasury modeling showed that imposing the sanctions without the price exception ought to cause massive increase in the price of crude oil, potentially sending it to around $140 per barrel from around $100 in step with barrel now, the Treasury reliable mentioned. However, there has been some uncertainty approximately the estimates, especially across the assumptions about the pliancy of demand for oil, the professional added. EU, British and US companies account for about 90% of worldwide oil delivery insurance and reinsurance, which might make it tough for Russia to hold oil flowing as soon as the one's sanctions took effect at the quit of this year, the Reputable said. While some specialists consider Russia, India and China could step in with sovereign coverage, Treasury officials did no longer share that view, the professional mentioned.